This video is all about an Ethereum beta play. Earlier this year, we had the launch of the Ethereum ETFs. And while they haven't been quite as strong as Bitcoin ETFs were, they still provide a viable route now for institutions to gain exposure to Ethereum. And I think the attention has moved off Ethereum because Ethereum price hasn't increased that much. It's been a bit of a lackluster performance in terms of the Ethereum ETFs. So people aren't that interested in Ethereum at the moment. But since we've had this market, the summer slump over the last 3 months, since we had all-time highs in March for Bitcoin and in many altcoins, in fact, in March 2024, we've seen a pullback and we've seen a retracement. Ethereum isn't doing that well in terms of outperforming others in the market. So I think the attention has diverted completely off Ethereum. But therefore, it could be a perfect time to look at some Ethereum beta plays to see when attention returns to Ethereum, which is still the second largest blockchain ecosystem, the second largest cryptocurrency out there by a long stretch. When attention returns to it, what are the projects that could benefit from that? And as we've seen this pullback over the summer, many of those projects have returned or pulled back 60 to 70%, including the one that I wanted to cover today. And as one of the lowest risk Ethereum beta plays in the ecosystem, does it still hold tremendous upside? That is what I'm interested in finding out today, and the project that I'm going to be looking at is called Lido Finance, and its native associated token is called LDO. If you enjoyed the video and you take value from it, please hit the like button down below. It really helps the channel out. And of course, I would love to have you as a subscriber. If you are a subscriber and you want to keep up to date with all of the latest videos, hit the bell notification icon down below too. And alongside altcoin analysis, if you're struggling to keep up to date with this market, because it is a minefield in terms of all the key signals that you need to pay attention to, because there is so much noise involved in the market, if you want a newsletter that breaks those key signals down, then my 80/20 newsletter is the place to head to. 1 email per week, just so that we can all keep our finger on the pulse of what is happening in the markets. I'll leave a link to that in the description down below. And with all of that being said, let's take a look at Ethereum's most prominent liquid staking protocol, Lido Finance. So what is Lido Finance? Well, Lido Finance is a decentralized liquid staking protocol, and that allows anyone to stake cryptocurrency coins to earn staking rewards. So staking cryptocurrencies isn't always the easiest thing to do. So Lido is providing a way to gain access to those staking rewards that are on offer without the hassle of setting up your own node within a blockchain, for example. And this is all controlled by the Lido DAO, this decentralized autonomous organization, which ensures that there is no one entity calling the shots for the platform. They control the fees, which node operators are chosen, and any other aspect of the protocol. So in addition to the simplicity with which anyone can stake using Lido Finance, it also enables stakers to amplify their liquidity. So it simplifies the process and it also amplifies the liquidity that you have locked in the protocol. And that means, and this is the process, you stake a coin like ETH, you receive a staking token back, which is called STETH, and that earns rewards, the staking rewards that you would otherwise have earned through doing the proof of stake process. Then, however, you can then use the STETH, this returned staking token, you can use that in DeFi, and that still holds the value of your ETH. So you're not restricting the capital. The capital that you have locked up in your ETH can still be used within DeFi applications to earn even more rewards if you choose to do so. And this process right here, they offer it for institutional investors. So if you're an institutional player in the markets and you want to access proof of stake rewards, but you don't want to lock up your capital, they offer institutional applications to this as well. And in addition to that, you can also bridge your assets outside of the Lido ecosystem. So there are a bunch of layer 2s in play here where you can take advantage of your staking tokens within DeFi applications, but on other layer 2 networks. And we can see the list of the Lido ecosystem and where you could earn more from your staking reward tokens. Now, Lido Finance was founded back in October of 2020, and it was launched shortly after that in December of 2020. And that was to align with the launch of Ethereum's Beacon chain. Now, this is important. So for those that might not be aware, the Ethereum Beacon chain was Ethereum's first step towards what would be the transition from proof of work to proof of stake. So remember that Ethereum used to be proof of work. But there were several restrictions when it came to staking on this new beacon chain. The main one being that you needed a minimum of 32 ETH to be involved in the staking process. So you needed a minimum of 32 ETH. So the solution was liquid staking with Lido Finance. Since then, they've done so well with the Ethereum ecosystem because they did so well with the Ethereum ecosystem and Ethereum staking. Since then, Lido expanded to provide services that included the likes of Solana, Polygon, Polkadot, and also Kusama at one point. However, since then, it has removed Solana, Polkadot, and Kusama, and now just focuses on Ethereum, but also on Polygon Matic. Now, where is the native token in all of this? What is LDO used for? Well, this native token, LDO, is primarily used to control the Lido DAO. So to have a vote and therefore steer the direction of Lido Finance, users must hold the LDO token. So what about its tokenomics? Well, the current market cap of LDO currently stands at just under 1 billion, just under 900 million, I should say, $888 million. And then out of a total supply of 1 billion LDO tokens, 895 million are currently in circulation, so 89.5%. So that means that there's just over 10% of LDO tokens left to enter circulation. And if we take a quick look at the price chart, we can see that prices started back in January of 2021 on CoinMarketCap. And if you had one word to describe the price of LDO, you would probably use the word choppy. We saw an all-time high back in August of 2021 of just over $6. And then since then, we have seen 1, 2, 3, 4 peaks, with the latest peak being in March of 2024 when it peaked at $3.50. So as always, we now need to take a look at the upsides and the risks for the LDO token. What are the things that can drive its demand, put an upwards pressure on its price, and what are the things that could either strip demand or oversupply the market that could cause the price of LDO to crash. Now, starting with the upsides, Lido Finance remains the most popular on-chain self-custodial option for staking crypto coins. It is by far the largest DeFi protocol in the Ethereum ecosystem, and according to the chart on DeFi Llama, it has seen consistent upwards growth in terms of the total value locked in the ecosystem. So we're currently on the Ethereum chart, and we can see even throughout the latest summer slump, it hasn't withdrawn or retraced that deeply. We are still at near all-time high levels. And this continued growth is despite Ethereum's beacon chain allowing withdrawals earlier in the year. So we can see that ETH withdrawal activation occurred back in, it's been over a year now, so back in May of 2023. We had an upgrade. Ethereum stakers that have been staking in the beacon chain could then withdraw their funds for the very first time, which made the staking process in Ethereum much more fluid. So then there was a question as to whether Lido would become this redundant protocol, but still people have used it. In fact, it's increased since then. And then we come to the question about fees. The best performing altcoin projects tend to have revenue streams, and Lido Finance has a great one. With 30 billion locked in the protocol and 10% fee on all staking rewards, Lido Finance is raking in millions each month. And according to this chart on Token Terminal, the protocol has amassed $52 million over the last 6 months, outpacing the likes of Uniswap Labs, Aave, PancakeSwap, Curve, and a bunch of other layer 2s. The only other application that I can see is outpacing it currently is Aerodrome. Next, there is an ongoing speculation that Ethereum ETFs will one day allow staking, which could mean that Ethereum ETF investors have access to the same staking reward opportunities. And if that happens, Lido Finance could be one protocol that ETF issuers turn to. It's now trusted, it's battle tested, it's battle hardened, could be what institutions turn to. And if they do turn to Lido, then that's just going to place even more TVL in the ecosystem, potentially place more demand on the LDO token. Finally, 2 other quick little points that we need to talk about. The circulating supply of LDO tokens stands at 90%, well, near enough 90%. So with only 10% of all LDO tokens left to enter the market, the risk of future dilution is, or at least should be, extremely low. And then also LDO's market cap, which peaked in March of 2024 most recently, since then has retraced by more than 60% right now. So the risk to reward profile of this large cap coin is now far better than it was 4 months ago. So in terms of a risk to reward profile for this coin, things are looking pretty good at the moment. But now we need to evaluate the risks. What are the risks that could drive the price of LDO lower? Now, there are three major risks documented on Lido's platform. So they're documented, they're on the website, they tell people about these. And these three risks are the security of their smart contracts, the slashing risks that are involved, and the ST token price risk. So there is always a smart contract risk with protocols such as Lido Finance. They could always contain vulnerabilities. There is also a risk that a validator node in the network might mess up and therefore get a slashing penalty. So that's the slashing risk. And there is always a risk that the ST token price could depeg from the underlying asset. Any three of these risks would then negatively impact the price of the LDO token. And then I kind of mentioned this before, but the second risk is that a lot of Lido's early adoption came from ETH stakers, so Ethereum stakers, who didn't have the previous minimum requirements of 32 ETH to stake within the Ethereum beacon chain, or they didn't want to be locked up within the Ethereum proof of stake network. However, that minimum has now been removed and there's no more restrictions on withdrawals. So with the restrictions of staking Ethereum just purely through the Ethereum blockchain now not being as severe, will the use of Lido Finance just slowly diminish with time? That's a question that we don't know the answer to, but it is a risk that we should take into account. Now, another risk that we need to take into account is that upon generation of the Lido token, over 70% of LDO tokens were assigned to Lido Finance's team or treasury in one way or another. Now, some of the largest token wallets still remain with the Lido team. So although they are currently in circulating supply, technically, there could still be a constant risk of sell-off from the team in the future. We can see here that the majority of recipients, the vesting recipients, for example, have 5% of the supply, 4.5% of the supply, 4.5%, 3%, 3%. So huge volumes of the LDO token. But with 90% of LDO tokens technically in circulating supply, they've already been vested, there could still be a constant selling pressure to come because of the amount that is held by members of the Lido team. Who knows? But there is a high volume of the coin, a high percentage of the coin held by a small number of wallets, which is a risk for most protocols. Finally, although Lido Finance today currently holds the #1 spot, competition from other DeFi applications can't be ignored. So we've got competitors that include the likes of, we've got Rocket Pool, Frax Finance, Stakewise. These are all just a few examples. Lido Finance might be the less risky play, but others will likely offer more upside potential, and it might be what attracts more investment as we go into this next stage of the bull run. And that is everything that I have to share on Lido Finance. So standing as one of the largest dApps in the Ethereum ecosystem, not just a liquid staking protocol, but one of the largest dApps, it is gigantic. But does it still offer, does the LDO token still offer good investment potential upside? As always, I share my own opinions on projects such as this, altcoin projects such as this, with my 80/20 community. So if you want my personal opinion on altcoins like this, alongside crypto signals, then my 80/20 newsletter is the place to head to. Like I said at the start of the video, I'll leave a link to that in the description down below for those of you that might be interested. And as always, thank you so much for watching. I really hope you've taken value out of the video and it's helped you on your investment journey. All that's left for me to say is thank you again for watching, and I'll see you in the next one.